Hi everyone, it's Chad back with another video. Today I'm going to be talking about Medical Properties Trust. It's a real estate investment trust, the largest non-governmental owner of hospitals in the world. It's a pretty interesting business. More interesting is that it currently has around a 14% dividend yield. It's down 53% in the last year. That's with a 7.5% increase today at the time of recording based on its earnings. Still, even with that, percentage of the float that is short is around 27%. 19% of all shares outstanding are short right now. Incredible pressure on this business for a number of reasons. Results that came out, I'm going to talk about them in a minute, not particularly impressive. They're selling sections of the portfolio. They sold the Australian real estate portfolio essentially for $1.2 billion at a loss. Not a great loss, but still at a loss. Obviously securing some cash to pay down the debt and secure the position. But right now, 14% dividend yield. That requires some coverage in my opinion. It's right near its 52-week lows. Is there some value to be had here? Is it a buy, sell or hold? I'm going to analyse that this video. Like and subscribe and enjoy the content. Let's get into it. First of all, the headlines of this business. Per share net income of 5 cents. This is a significant decline from previous quarters. And normalised funds from operations of 37 cents for the first quarter. That's compared with 47 cents just a year prior. They have a couple of recent transactions that I mentioned, but crucially, declared second quarter regular dividend of 29 cents. That's the same as last quarter, so it's hanging on, no dividend cut. And their assets, generally despite the sales, have not changed. Most of it remains in general acute care hospitals. The rest of the quarter was pretty dire if you ask me, aside from the dividend being maintained. Total revenues down over 10%, rent billed down around 5%, and then the worst of all, net income from a massive 631 million down to just 33 million. Absolutely dreadful. Of course, there was obviously some one-off expenses that happened in that, but even still 33 million is far, far below what they should be getting. You just think of the margins on that. For $350 million in revenue, for just 33 million in revenue, that's absolutely dreadful. Okay, so operationally, this business is underperforming a little. The net income drop notwithstanding, which is obviously pretty dramatic, which can be quarter-to-quarter variability, that is not worth 25% short interest. What is worth 25% short interest is problems with two of the three largest holdings. Now, the Priory Group is the odd one out here. That's doing absolutely fine. They've actually increased their holdings in this business. Prospect Medical, which the net investment is down around 30% since the last quarter, is struggling to pay its bills, has been struggling for a long time. It's in Pennsylvania-based hospitals. The bigger worry is Steward Healthcare, which is $3.5 billion of net investment, which is around 40% of the total portfolio. Has a couple of allegations been made against it in Wall Street Journal articles, against executives potentially overpaying for businesses deliberately and for getting paid for the number of acquisitions. Both of these are really concerning for me in terms of the quality of this section of the portfolio, and have been long-term concerns and don't seem to be getting any better. They're kind of locked in with Steward Healthcare at the minute. The rent coverage is fairly good, they're making decent money off them, but there are considerable problems with this business, and this concerns me that essentially half of the portfolio, or over half the portfolio, is in two businesses which I would consider embattled or potentially worrying. Okay, so maybe these two problems combined are worth 25% short interest. However, when looking at the assets and liabilities, it actually looks pretty good. Total assets around flat for the quarter in a tough real estate market where the real estate assets actually dropped. Overall, the total assets have remained essentially the same, different only by a few thousand. This is absolutely great in my opinion. This needs to continue happening. We're in a weak real estate market. Asset value may drop slightly over time, but in the last 4 months or so, nothing has really happened. Absolutely excellent, and liabilities have only crept up in this time. Now, debt is, well, it's not the inventory, because real estate is the inventory of these businesses, but that is part and parcel of being a real estate investment trust. It is necessary in a lot of ways to be able to get these businesses going, so having some debt is not really that big of an issue in my opinion, and the total assets to liabilities ratio is good. Also, I believe they're in a really secure position with a lot of their leases. Aside from 4.3% of the lease portfolio coming up in 2023 for maturity, the majority, 86.4%, is 10 years down the line after 2032. This is a really nice position to be in. Now some valuation metrics. looking at the price of funds from operations, as I mentioned previously, was 37 cents a quarter. We times that by 4, make an estimate of the forward price to funds from operations, looking at around 5.5, which is not screaming cheap, but it's pretty cheap. Of course, this is what I would argue is a slightly distressed asset, but for one that is going to be paying out around a 13 or 14% dividend yield, I think that is pretty decent price to pay, and the risk is kind of baked in. What we're looking for here is really price to cash flow and price to book. Its 5-year average of price to book is 1.39 times book value, and right now we're looking at 0.55 times book value, a significant discount to book value for this business, far below the index, which, well, doesn't really matter so much because the index is the S&P 500, and price to cash flow is typically around 15 times, currently around 6.5. I think this is a potentially reasonably valued business based on its risk profile. There is definitely some margin safety baked in, and I definitely think there's potential for a short squeeze. Made a video about this not so long ago. It was around $7, now it's around 8.5. Definitely some shorts being squeezed here. It rose 9% today. I think the dividend is going to be paid out later on in the year. It may come under a bit more stress, but them selling some of their portfolio to generate cash seems like they're going to be in safer hands right now. At this price, I think there is some margin of safety here, but for me, there's just not enough. I think there's definitely the possibility of a short squeeze. I don't think it really deserves to have 25% of its float to be short. It's going to likely pay a 13% dividend this year. There is definitely chances for a dividend cut, but even if it's cut in half, it's still going to be a 6.5-7% dividend yield. There's potential for the share price to rise. It's already rose from around its 52-week low a couple of weeks ago to 866 now. Definitely potential for a short squeeze coming up. I do think this is a distressed business, but I don't think it's one that's likely to go bankrupt. I think the Steward healthcare does concern me. That's primarily the reason I won't be investing, because I just don't really need that sort of risk. However, there's definitely opportunity here for investors that are willing to take on that risk, because I think there is some margin of safety baked into the valuation. However, just not for me right now. With that being said, you shouldn't buy, sell, or hold because I say so. You should speak to a registered financial advisor and do your own research and due diligence before buying any stocks. Like and subscribe and enjoying the video. Let me know what you think of Medical Properties Trust below. Do you think it deserves this? Do you think there's potential for a short squeeze? Do you think this is going to zero? Do you think this is going back to its 52-week high? Let me know what you think in the comments down below. Like and subscribe and enjoying the video. I'll see you next time.